Yep, so my name is Samaya Keynes. I'm the Britain Economics editor, and my first task is to thank all the speakers today for participating in this event, and also to our sponsors. Thanks to our lead sponsor, JP Morgan, thanks to our platinum sponsor, Interos, thanks to our gold sponsor, Google and Google Think Global, our silver sponsors, Citi and MSC, our bronze sponsors, Altana AI, Vulcan Group, the Hinrich Foundation, and 09 Solutions, and our supporting organization, the EIU. I currently cover the British economy, but I will confess that I'm a recovering trade nerd. I am currently the co-host of The Economist's Money Talks podcast, and I have been following this kind of global supply chain story. Recently, I spoke to someone who was involved in logistics who was telling me about her Christmas snowman sponges that was supposed to arrive in time for Christmas shopping and arrived sometime in the spring, which feels kind of fairly typical stressful anecdote for someone managing supply chains in this era of disruption. I'm really hoping today can be a day for connections. Very glad that everyone's already met each other and having a good time. Now, I think the theme of today, supply chain resilience, is really fascinating. I was covering trade when the pandemic hit, and suddenly all sorts of people who I hadn't thought of as trade experts suddenly revealed themselves to be trade experts, and developed very strong views on diversification. Diversification away from China, holding more inventory, those sorts of things. And so there was this wave, we've had this massive shock, autarky is nigh, right? We're going to have this big retrenchment. And then there was a backlash against that. There was this idea that, let's not go crazy about geographic diversification. Actually, China's opened up more quickly than everyone else. Everywhere else looks like it's a bit of a problem, right? And so the idea that there would be this huge seismic shift was slightly undermined. There was also this idea that if you massively diversified, that could, in terms of your suppliers, that could introduce more points of vulnerability, right? So there was this idea that instead of having lots and lots of different relationships and having lots of baskets for your eggs, actually what you wanted is fewer deeper relationships with your suppliers, and that would help you recover from shocks. So now I think all the disruption that people thought would end fairly quickly is still with us. It's kind of been funny for me to sort of look at this story and think, really, this hasn't ended yet. Kind of, okay. There are a few companies that have done very, very well from this. There are lots of the supply chain unicorns. Investors have been plowing their funds into these companies, trying to, benefit from the disruption is perhaps a bit mean, but definitely there's an opportunity there, and lots of companies have been seeing huge investment. I think there's lots of emphasis on supply chain transparency, that further visibility all the way down the supply chain. That seems like one of the trends that will stick. Digitization obviously helps with that, and so I think one of the really interesting questions right now is, of all of those questions, those big questions about the future of supply chains, resiliency, what does that mean? Some of those I think are still a bit up in the air, partly because we're still in the middle of this big shock, right? It's really difficult to tell what is this kind of weird shock where we're recovering from COVID and what is the new normal. And so what I'm really hoping is that in some of the sessions today, we'll kind of get some insights into what's temporary and what's structural. Okay, so the theme of today's event is how you shift from efficiency to flexibility in time of crisis, and there is no better panel to start the day than the one we've got coming up. So can I invite the speakers to the stage at this point? They're all at the back. So at this point I have to orchestrate the order. Okay, so we've got one speaker who's actually dialing in, I think, because she has COVID, unfortunately, but thank you. Here we go. So we've got, here's fine. Great. Yeah. Okay. Sorry. So dialing in from us, thank you so much, is Sophie Ostrom, who's the Executive Vice President, Global Logistics at Gant. Then we have Ivanka Janssen, who is the Chief Supply Chain Officer and Executive Vice President at Philips. Then we have Navdeep Singh, who's the Vice President of Global Planning and Customer Experience at Unilever. We've got Hannah Norberg, who's the initiator and president of the Trade Experts. You can see their stall outside. And then we've also got Kaz Alzarka, who's the chairman and founder of Falcon Group. Okay, so before I start grilling our panel, can I just tell you how to answer questions? I'm hoping this will be interactive, and so you'll have your chance to grill the panel. And so there should be a code. Yeah, okay. So essentially, if you go to your smartphone and you go to www.slido.com, that's SLIDO.com, you should be able to put in a code. I can't actually see the thing. Yeah, there's a code there, GTW 2022, and you'll be able to input your questions, and then I will see them. So yeah, that's how you'll get your questions asked. Okay, right. So Ivanka, let's start with you. So drawing on your experience at Philips, and thinking about, other supply chain executives out there, what lessons do you have from the past kind of year or two of disruption? What practical advice would you be handing out?
I think it is the title of this session. It is, how do you go from efficiency to become a resilient, agile supply chain? And if I look what we did at Philips is, when COVID hit us, I think we were all in shock. We didn't know what to do. We had on one hand businesses that where we either couldn't get the supplies from China or where the demand would have dropped. But we had also businesses where the demand was spiking and we had to increase production a tenfold. So after a few weeks, we stepped back and said, okay, what do we need to do? And one of the things that came apparent is that when the demand was spiking, we needed to have more manpower, more components coming in. And we did rethink actually our organizational model in a very, very fast manner. We didn't go through a massive reorg, but what we said is the people that are working in the businesses where the demand has dropped, let's bring them over to the businesses where the demand is there. And we started setting up an organization structure in tribe and squads. So small units, they were end-to-end responsible, and they could make their own decisions on what was needed. We also had partnerships with other companies to help us start sourcing. So when we looked at around us companies where, they had to close their factories because either there was no demand or they couldn't source for the components, but they had the knowledge and the experience, they came to help us. So it was all about mobilizing your resources in a different manner. And we still work in this manner, so we still have a lot of tribe and squads in the organization. What it does is that it makes you very agile, you can respond very quickly, but it also empowers the organization. And I think empowerment of the organization was an unlock for us. And then next to it, of course, but then I will hand over to some of the other speakers, is having data transparency. So knowing what you need, knowing very deep in the supply chain of our suppliers, where we potentially see shortages, capacity issues. So creating that data transparency and tier deep is a key unlock to whatever you need. Mm-hmm. But maybe good for some others to respond.
Great. Okay. Well, yeah. If anyone else has thoughts, please feel free to kind of add when I ask my question. So Navdeep, let's go to you next. So. Well, yeah, I mean, similar question to you. What would you say are the kind of lessons learned from the past couple of years of disruption, and what did you do at Unilever?
Yeah, no, I think Ivanka mentioned mobilizing the internal resources, which I think was extremely important for Unilever as well. And I think data visibility was also very important for us because it helps us find where the real issues are. But I think one thing which we also did quite a lot was collaboration with both our customers as well as with our suppliers, because we found that during these times, we really need to be very agile in what we want to do, because you might be in a situation where a supply node stops operating or stops supplying, but then you need to collaborate and find in the network where you have flexibility. So I think we found out that collaboration became an extremely important aspect during this time. And all of the partners were also willing to collaborate during this time. So, that put probably collaboration at a new high during this time. So I think that would be one point which I'll add as a aspect which came up.
Okay, so obviously everyone just wants to talk about the things that they did amazingly well during the pandemic. Is there anything that you would do differently if you could do it again?
I can answer that.
Yeah.
So we were not sufficiently dual sourced. And that is something that we are really motoring ahead with, because if you're not dual sourced, then one of the risks you have is that if either your supplier is spread too thin over too many customers or on their end, it becomes a very, very tough negotiation. So we go in full dual sourcing, we go into regionalization, so have the suppliers on different parts of the continent, not only in China, and really de-risk. So that's one of the things that's one of the big lessons we had.
Navdeep?
Yeah, and maybe I'll add to it. See, maybe it's not that we actually always did this thing, but probably this heightened the need for agility during this time. So if you look at, for example, it's almost impossible to run supply chains always hand to mouth. And in a market like us or in a company like us in Unilever, we are always running on very high capacity utilization throughout the year. So we really found out that we should not be loading capacity to the fullest in the factories. We should be having buffers in the factory to be able to respond. Capacity utilizations should not be like close to 90%. So I think one of the things which we really found during this time is that agility probably trumps forecasting. And agility is extremely important because you cannot really predict everything. So agility becomes really important, and we would want to do a little bit more of that going forward.
Okay, great. So Kaz, so I want to talk to you about inventories, right? So I guess one of my concerns is that at the moment there's lots of emphasis on building up inventory, kind of being resilient to huge demand shocks when perhaps your forecasting goes wrong. But we've seen cycles of boom and bust before when it comes to inventories, right? It has been the fashion to build up high inventories and then, cost considerations get them down. Do you think that what's happening now will stick? How much do you think is permanent and how much do you think is temporary?
Well, I think we've witnessed a perfect storm in the last few years here. I think our colleagues here are just explaining how they dealt with it separately and differently, each one of them here. But I think one thing is sure is uncertainty is here to stay. And everybody realized that there is a lot of fragility into the supply chain. Nobody can produce 99% of a car and sell 99% of a car or of a medical equipment or whatever it is here you have. So if you have a small piece missing coming from China for $10 here, you're stuck, you don't have a business here. You have fixed costs, but you don't have a business here. And it's not only about you, but as well about your tier 1, tier 2, and even tier 3 suppliers here. And so everybody has this this reaction after the COVID hit, that we need to have more inventory into the supply chain because it has a cost here, but this cost is far smaller than not being able to produce and sell. So I think people are thinking of it today more as an insurance policy. I will carry more inventory. I may have some losses here. It's going to cost me more, but it's far cheaper than not being able to produce and sell. So I think this is here to stay. And where we are seeing definitely far more inventory into the supply chain, we're seeing a lot of friction as well. Nobody wants to carry it. The big boys don't have a balance sheet issue, but they still report into war. They're trying to push it down to their contract manufacturers or the suppliers, and those guys have their own issues, and they're trying to push it back to the big boys here. And there is more inventory in the supply chain all the way from the top down, but nobody wants to own it. And that's what we do here today. So I think we found it probably more difficult 4, 5, 6 years ago to sell the concept to very large corporate, Fortune 500. Today, we see RFP coming to the market nearly every week. So I think the trend is here. People used supply chain funding in the past as a way, but supply chain funding only helps you when you have an invoice here. Everybody's moving to VMI programs, vendor managed inventory here, and where you're carrying inventory on your balance sheet, well, guess what? You can't run to bank XYZ and say, please discount my invoice because you don't have one here. So today, we think that supply chain funding is something of the past here. Tomorrow is going to be all about inventory program here, which is far more holistic in a way across the entire supply chain, OEM, tier 1, tier 2, and tier 3.
Interesting.
So can I ask?
Yeah.
So how do you think? Because now a lot of industries are really scrambling to get the components that they need. But a lot of the suppliers, they're asking to place the POs 2 years out with, no guarantee that you can cancel, reduce, or anything. So there will be a huge host of inventory coming on all kinds of critical components that are short. So how do you see how suppliers, but also companies like Philips, should deal with that? Because I do think we're going to have a surplus of stuff coming in.
You're absolutely right. And as I said earlier here, it's all about getting your MRP right here. It's a big part of the equation here. And for example, what you're explaining makes me think of a case we're working on actually with a major European car manufacturer here. Is about electrical batteries for electrical vehicle here. Everybody's scrambling to put their hands on those things here. And people prefer to have too many than not enough. And those are quite relatively standard product here. They're going to go into cars. So I see people here preferring to have 2 years of supply now for a model that's going to come next year here, rather than not have those batteries and not being able to produce and sell those here. And this is, for example, something here we're building inventory because the production of in China has only this much capacity, but they need far more. And so they're starting building inventory for today for what they will require into 2023 and 2024 here. But they need to buy it, hold it here, but it's very inefficient for them to be having that in their balance sheet here. And that's where we step in, for example, here. Electrical vehicle is one example, which is extremely valid today, but we see it across all the industry. I say that when COVID hit, my grandma rushed to the supermarket and bought all toilet paper she could find. Today, every CPO seems to be doing the same thing today. They are stockpiling on inventory and in a frantic way, but they think it's better to have too much than not enough of it today. And that's, I think, will remain. It will maybe readjust and normalize, but I think nobody will take the risk of not catering for a potential next crisis.
Yeah. So do you think vertical integration is an answer?
I'm sorry?
Vertical integration could be an answer?
I don't think it's a vertical integration here. We hear about dual sourcing and nearshoring and all of this kind of thing here, but that will take time. It doesn't happen overnight. But you can say, I don't want to order one container, I'm going to have 4 in my backyard, just in case something goes wrong, I have. And I think, not someone who is a client, but I'll take the example of Tesla, who is not our client here, but they publicly announced they want to produce 2 million cars this year versus 1 million last year. And they're asking all their contract manufacturers to hold not 4, but 16 weeks of inventory. So every $1 problem last week becomes $8 this year. Imagine the impact of that, not for Tesla, but for all the supply chain behind it here. Massive problem. Everyone has working capital issues, and everyone wants to de-risk this as well. So it's not about Tesla, but it's tier 1, tier 2, and tier 3. And how do you help this? And how do you support it? Because exactly as Navdeep said here, if one of those fail, well, you still have the same problem. So you need to be able to support the entire supply chain here to have a seamless business.
Can I bring in Sophie at this point? Because Sophie, I wanted to ask you about inventories in the context of fashion, right? Where you might worry that a product would go off season, stuff doesn't necessarily last. So how do you see this problem of building higher inventory? Is that always a solution?
First of all, I think it's super interesting to hear that we're all of us facing the same challenges, no matter of business. I mean, we've all been operating in a business where it's about operational efficiency, creating stable flows, and cutting all type of overflow and just keeping it stable and focusing on the cost. And now things has happened in the world the last years. And we suddenly need to create flexibility. Can you hear me okay? It's perfect. So I think for Gant and for companies in the fashion business, we do have seasonal products that are intended for a specific season. And I think the answer to this one is to handle the supply chain in a different way, not one size fits all products. So what we're trying to do is basically to distinguish between the products. Are they intended for several seasons? Can we predict them in advance, keeping the cost down, the flexibility down, and keeping them in inventory? And where do we have the seasonal newness, the really, really fashion product that we need to keep in a separate supply chain that is a lot faster? So I think the answer when we have products that are only intended for a specific period of time is really to create a segmented supply chain where we treat them differently, not having one supply chain, but managing several. And just like the other ones I said, I mean, visibility is really a key. No matter how many supply chain and different characteristics you have, it's still a matter of things can happen. And if you are late, you need to know that well in advance. So from our point of view, it's about, do we know a product is running late? Then we can adjust all the sales activities, all the brand, all the marketing, or all the store stuff, etc. So we can act upon the new timings.
Thank you. Okay, wonderful. Now I'm going to go to Hannah. So I guess you often think about a different kind of risk, right? Which is kind of geopolitical risk, policy risk. So I guess obviously over the past 5-10 years, we've seen a fairly major change in that kind of risk environment. We've seen Trump, we've seen Brexit, all those things. But just thinking about the more recent past, right? So since the beginning of COVID. How do you think that attitude to those kinds of
That's a really good question, and I think that you said it really well in the opening statement, right? That all of a sudden, people are waking up to trade and trade policy. So it used to be this obscure thing that only people like Sumaya and I would be interested in, and then it was like putting along nicely. Trade policy was about liberalizing trade, and it was about lowering costs and making it easier for producers. And now we're at this level where, the very popular song title that comes on in every generation, it's you don't know what you've got until it's gone. And that's really what's been going on in trade policy. So all of a sudden, well, first of all, what I should be saying is kudos to my fellow panelists here, because you have managed to keep supply chains running, which to me is just amazing. And when COVID first hit, I was just certain that we wouldn't see any Christmas lights coming in, right? Because that needed to be done in February, March, but the shelves have been full. So it's really not until now that we see the straw on the camel's back, and we're seeing like serious issues in supply chains. But what we're seeing is also that going on in trade policy. So all of a sudden, policymakers are using trade policy as the wrench, basically, to be thrown into the works for other reasons, geopolitical, war, trade war, whatever, right? And all of a sudden it's going the other way. And to me, as an economist, so I'm a trade policy advisor, so I work with governments in helping them find the best ways to do trade policy, but also as an economist with inflation and all of that hitting. It's a really interesting and dangerous path to be taking without having the information that you need. So few things, I know I am biased, trade experts, because trade is my game, right? Trade policy is my game. But it's few things where the signing of a document can change the lives, the livelihoods, the consumptions of hundreds of millions of people. So we really, 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 really need to work hard to get that correct when we make these decisions, right? And so if I may, Sumaya, just hog the mic here for a second and ask my fellow panelists exactly how has so trade policy is the rules of the roads, right? But these people are on the roads, which is fascinating, and you guys should be having more impact. So I would love to hear from all of you, Sophie, too, what exactly are you running into in trade policy?
So from our side, we still believe that cross-border trade is the way to go. So we don't believe you need to be near-shoring things. as Ivanka was saying, diversification of suppliers, having suppliers sourced from various countries, various geographies is probably the best way of building resilience and not being tied to one location or one geography. So I'd say from a trade policy or from a Unilever perspective, we still believe that cross-border trade is the way to go and not necessarily near-shoring of suppliers. So that's what we do.
I guess another way of putting the question would be, from in your day-to-day, how much do you have to pay attention to geopolitical policy risk, right? Is that something that you could just take for granted as a stable ecosystem, and now you're really having to pay attention to it? Or is it actually the kind of the big rumble in the background, and really the things that are occupying your minds are the kind of day-to-day, how do I manage this piece of, this inventory or deal with these costs? Ivanka?
I think nowadays it's part of the whole risk assessment, and it's definitely in the top 3 that you have to look at. If you look post-COVID, we thought all COVID goes away, China opens up, things will be easier, and then boom, there we have a war, and boom, there we have COVID lockdown in China again, and I think it's maybe different for different industries, but as we produce life-saving equipment, for us keeping the supply going, it means that we have to diversify. So that means that our supplier base will be much more diverse, much more over different geographical areas. And then you need to start managing that and, bringing that all in, and with all, the trade agreements that we have out there, it becomes more complex and also more expensive. But it is absolutely something will not go away, and we will need to build up the expertise, and luckily there are other people that have that expertise that we can tap into.
Mm-hmm, mm-hmm. Sophie, did you have anything you wanted to add?
No, I just can agree. I mean, the whole everything that is going on globally makes it even more important to be agile and flexible. And I think it's a constant monitoring and trying to have a proactive mindset to be able to act upon the changes that will come. And I mean, we are in the middle of a large change. And I think just like the other speakers have said, it's here to stay. And what we can do from a supply chain perspective is to prepare for the unknown, to prepare to move production, to move flows, etc., and to build a supply chain that is really able to steer almost in real time, because that's how fast things are happening.
Okay, I want to get to some of the audience questions because they're really good. So thank you. So we've got one question from Joey Eccles, who's asking what advice the panel would have for SMEs, given that they may not have the resources to completely overhaul their supply chains, but they still need to build resilience. Navdeep?
Yeah. See, one of the things that we in Unilever have started doing is that. So I think just to go a step back, I think there is one mega trend which is happening in terms of supply chain is no longer linear, but supply chain is an ecosystem. And so if you see a lot of the big organizations start talking to the suppliers, we start having more collaboration and building an ecosystem. And I think while we do this, we don't only share the KPIs and metrics with our partners, but we also share the broad goals and the broad purpose of the organization. So I think for every company which is trying to associate itself, let's say, with a bigger organization, I think it's important to kind of align with the wider goals and objectives of the organization, rather than only a set of KPIs, because that also becomes a larger part of the game plan. Look at the immediate metrics or the short-term metrics, but to establish a partnership, you need to look also at the purpose and what the other organization is trying to do. For example, in Unilever, sustainability is a big part of the agenda for Unilever. So, having a partnership with Unilever for SMEs, sustainability becomes automatically an important agenda to, have that partnership.
Mm-hmm.
I mean, one thing is sure is things will go wrong. And if you look around and you read the newspaper every day, and clearly there's a lot of risk around, and those risks are here to stay. I heard my colleagues here talking about nearshoring, dual sourcing, all of those things here. I am still not seeing this happening. lots of talk about it, but it takes a long time. You can't repurpose here or ask people to produce, especially very specific product here overnight. Just doesn't happen here. Some raw material comes specifically from some region here. We've seen it recently with wheat coming from Ukraine. You just can't produce wheat like this in the next 6 months in another region of the world. It just doesn't happen here. So I think we need to build this agility here. You need to build this resilience into the supply chain. I think this is here to stay. Everybody woke up one morning here in the last few years. It started, I think, with the trade wars of Mr. Trump, followed by COVID, microchips, even something as small as the Suez Canal here can majorly disrupt your business. I mean, it's a very small event. It's this butterfly event, but that can have a major effect on our everyday's life here. So people need to have this sort of shock absorbent into the system here for those things when it will go wrong. But surely I see that things will go wrong, and people, and especially law organizations, have a duty in a way to provide for that. Mm-hmm. And it will have a cost, surely, and nobody likes the cost. But it's an insurance policy we must have from now on.
Yeah. I guess listening to the kind of claims that, this is a new normal, part of me is kind of think, so there's a question here, which is, we've seen calls for supply chain resilience after every downturn, yet eventually resilience dies on the altar of cost effectiveness. Why is now different, right? And I guess my overwhelming feeling is that either it's probably not going to be different, or it's too soon to tell, right?
I'd like to take this one, if that's okay.
Yeah.
I think this time is different here, because I think large organizations realize they can die because of this disruption for the first time here. And everybody went to China because it was very cost effective here. But suddenly you realize, if, God forbid, there's a problem with Taiwan here, you don't have a business into this part of the world here. And I'm seeing a lot of talk about even people wanting to bring back a lot of the jobs that was exported here for cost efficiencies in the last 40 years back to this side of the world in the US. And that started again with Mr. Trump. But I think here there's a major political shift I see here, not coming from the political world here, but from the corporate world. We want to have things closer to home whenever we can, because if something goes wrong here, we don't have a business here. And Ford, for example, last year was a great example. It's public information. They lost $1.8 billion because simply they had a bunch of cars sitting on a yard. They couldn't sell it here because they had components coming from China that were missing here. And I think nobody can afford to have this kind of public issue again in the future.
Does anyone on the panel want to back me up and give me the case for why actually we may, in some cases, see a return to the old model of efficiency rather than resiliency? No?
I will go halfway.
Okay, great. I'll take it.
I think it will normalize. I don't believe we go completely that supply chains are going to be seen back off as cost efficient, etc., etc. I think it will be somewhere a hybrid. Reducing costs along the chain will always be there. Making sure that you have low inventories at a certain point of time will come back in as well. But because the ecosystems are really changing, and I think that's the difference. Companies are really, really physically changing their network, and that will not be reversed. And for that reason, you will have a more hybrid situation. So not all on cost, not all like we are now trying to source as much as possible, but somewhere in the middle.
Okay, great. Thank you. Okay, I have a question here about inflation, right? And how are supply chains adapting to the emergence of high inflation? Sophie, are you happy to take that one?
Yeah, I can give it a try. No, but in terms of inflation, what we see right now is quite a massive increase, and I think it's back to thing before, to work very, very close with your suppliers and agree on how you handle those kind of things, because we cannot really act upon them right now super fast, but we need to plan for it and have also a long-term view of how we handle these kind of things.
Great. Hannah?
Yeah, what I'm thinking here about inflation is that, again, I'm going to go back to my slogan here with "You don't know what you got," right? So what we have not had is inflation for a long time, which is unusual because money has been free for 15 years. Borrowing money has been free. The interest rates have been zero, basically. We have had a lot of really cheap Chinese imports. So I used to work with consumer price indexes, and every month we saw that there were inflation, but it's based on the whole basket of what people buy, right? And so every month, really cheap Chinese imports of electronics was pulling it down, and we will not see that anymore. And then what we're hearing also from the panel here is that we're not going to be working in cost effectiveness anymore, or not just that as a major goal. So something will have to give, and it will probably have had to give for a long time. And the only instrument that we have is interest rates, and it's blunt and it's slow and it's really difficult to do, and it also builds on expectations. So I think it's something that I hope I'm wrong, but we'll be seeing for a while, and it will change.
Mm-hmm. Anyone else wants to jump in?
See, so I think when you talk about inflation, I think all organizations, will tackle waste, will look at structural improvements to reduce inflation, which I think all of us, all the colleagues do here. So I think that's not, that's really not going to go away in terms of doing that. But however, I think and I'm referring to Sophie when she mentioned in a previous question that supply chains are no longer going to be one size fits all. And I think some supply chains will be able to handle inflation better than some other supply chains. And I think in the future, we'll have to design supply chains which have different models of service cost cash. And I think that's how probably in a structural way, organizations will address this question going forward.
Mm-hmm. Mm-hmm. Great. Okay. So we've got a couple of questions about sustainability. So I guess one question is the impact of inventory accumulation on sustainability, and then another question: how far is sustainability being actively used as well as cost, sort of to inform resilience approaches? Ivanka, do you want to take that?
That's a difficult one. Who asked that so early?
I mean, if you want to think about it, we can go to one of the other panelists first.
No, I can give it a go. So for us, sustainability is very high on the agenda, and Philips is really recognized worldwide as being actually we're the number one in our industry. So if I look at sustainability also across the supply chain strategy, it is something that we actively pursue, and I think as companies you can't back away from that anymore. But it is hard, because you need a lot of other partners to come to the table as well. So one of the things, for example, that we are doing, and I'm looking also here at Sophie and curious to hear from her how she's doing that. But in our logistics contract with our logistics providers, we want to see a commitment that the companies are going to electric vehicles, whether that's for the last mile or even electric trucks across the US and things like that. But there's still not many logistics providers that can provide that. Or really helping us to offset our carbon footprint. The logistics is a large part of the carbon footprint of many companies. So where are the logistics providers that are really pursuing this as an active strategy on their end to help us achieve our own goals? So I think it's actually maybe more a question back to people here in the audience. How can we work with the logistics industry to really modernize? Because frankly speaking, I think the logistics industry is one of the industries that has to still make the step to where a lot of other companies have already gone, but we're hindered by making the next steps because we need those guys to come on board as well. But maybe Sophie, as you're very much deep into the logistics, you can help out here.
Yeah, would be happy to take over. I think to start with, as a company, it's extremely important to map the entire impact that you're doing on the climate. So what we have done is basically to map all the steps in the supply chain from production until the customer to really understand where does it matter, where is the big impact. And if we look at the logistical part or the supply chain, which is actually a smaller part of our impact at least, then it's a matter of designing the network, I think. I mean, having one inventory globally that ships e-com order across the world, that is both expensive and definitely not sustainable. So I think from our point of view, cost efficiency and sustainability is sometimes hand in hand. What we have done is basically to design the whole network structure in terms of how many warehouses do we have globally, which regions are they supplying, so we can get fast deliveries but not have to use the fast transport options. So basically putting the goods close to the customer so we can really plan and use sustainable transport methods all the way out to customer. Because it's quite difficult as a customer. I mean, when they order online, they see maybe a good last mile option. But to be honest, it's actually doesn't really matter the last mile. It matters the whole way the goods have been transported from the supplier to the customer. And that's really what we're trying to do, to create a sustainable supply chain that is built for cost efficiency, but also sustainability. And then also in terms of what you said before, I think it would be so interesting and just waiting to see even more sustainable transportation options. It's really, I can't wait.
Question here about there's one question about whether there's a tension between the strategy of dual sourcing and sustainability, right? If you've got, if you're buying from two different suppliers, you've got two different transport networks, you might worry that would be associated with more emissions. Is that a problem or not?
I'm saying not really. I'm saying so. I guess I think if you have dual sourcing, it's not like directly related, but I think the general thing in sustainability is that you have to really work from end to end. You can't have an approach where you're looking at only one side of supply chains. So really need to look at end to end if you're trying to solve the sustainability problem. But I think dual sourcing is, you might have a situation where you are sourcing from a very far off supplier and you're probably incurring higher footprint. But at the end of the day, you need to look at the entire chain and see how it's making an impact. So not really.
Okay.
And you dual source there where you have the volume. You dual source there where you have the volume. Mm-hmm. So it's, it's not a blank approach across everything. So I actually would say it's, the other way around. Mm-hmm. You source closer to your manufacturing site, so your carbon footprint will be less. Mm-hmm.
I mean, maybe I'll throw my hat in the ring here for that as one. Funny enough, whether it's inflation or carbon footprint here, we've been selling our services here as part of the added value here today. A lot of clients actually are looking at bulk buying or building inventory as a way to hedge for inflation. It will be more expensive 12 months down the road versus today. So it's way buying more today has an advantage in a way to offset part of this inflation. We have seen it as a strategy from some of the procurement functions we're working with. But the other side as well, they see it as a way of consolidating a lot of the logistics together. Just in times, create a higher footprint here because you have a more frequent transport here. Being able to consolidate it doesn't have only cost efficiency as well, but for people very conscious, as the lady on the screen was saying about their carbon footprint here, being able to consolidate that, you can calculate your carbon footprint by piece or by unit or whatever it is here to be at a lower carbon footprint as well. So it's not something that came from us, funny enough here, but talking to some of the clients we have, it was very much on the back of their mind in the calculation of building a higher inventory buffer. So it was quite an interesting perspective we didn't think of here, but we're seeing it coming more and more on the table.
Mm-hmm, mm-hmm. Great. Okay. Well, I think with that, I will. I think it's time to wrap up. I mean, so I'm supposed to kind of provide a summary thought, which is basically impossible, given that there was so much interesting stuff that was said. I mean, I think I've heard some really, valid pushback to my claim that this is just a temporary blip and it's all going to return to normal. I think there is a sense that there is a kind of permanent structural shift underway. Sustainability seems very important to everyone, but it's not just us; it's you too as well. It seems to be one of the messages that we got. I think this is going to be a topic for. I don't think this is going away. We'll see what happens with inflation. Look forward to the next panel on this when this problem hasn't gone away in a couple of years. Great. Ivanka, Navdeep, Hannah, Kaz, Sophie, thank you so much.
Thank you.
Thank you.